As the Israel-Hamas war continues, people around the world are worried about its impact on oil prices as well as on the larger economy. Their fears are not unfounded. In fact, they're deeply rooted in recent history. Let's take you back to October 1973. Israel and a coalition of Arab countries were locked in another war, which began on Yom Kippur, the holiest day of Jews. Western nations led by the United States decided to come for Israel's support, but this irked the oil-rich Arab countries, most of whom were part of the OPEC group of suppliers. They decided to impose an oil embargo on several Western nations. Subsequently, a series of oil cuts led to skyrocketing prices. A barrel of oil traded for around $2.9. It rose fourfold to $11.65 a barrel by January 1974. And this led to a rise in fuel prices in the United States from an average of 39 cents per gallon before the crisis of 53 cents in 1974. The oil cuts led to energy shortage across the Western world and shook the global economy. The crisis also ended in March 1974 when the embargo was lifted. The crisis had a long-term impact on the West as the embargo ended its 3-decade-long period of prosperity. But the West's loss was a massive gain for the oil-producing Gulf nations. Until then, dominated by industrial powerhouses, they suddenly became the masters of, quote-unquote, the black gold. The rising prices brought massive amounts of money to the oil-rich West Asia giving rise to the term petrodollar. For the first time, oil became the focal point of global political economy. Interestingly, the push for alternate energy sources too can be traced to this crisis. All in all, the dynamic shift in West Asia can still be felt worldwide in 2023. So that was 1973. Now, how have the changing dynamics in West Asia affected the markets in 2023? For some perspective on this, we're now being joined by Dr. Suyash Bhatt, Director at AFTI, live from Dubai. So thank you so much for joining us on the show.
Good morning.
So what will be the impact of the ongoing Israel-Hamas war on global prices and oil-producing West Asian nations?
So 2 weeks back, I think today is the second week of this war. And 50 years back when this happened, there was a huge spike in oil prices, close to 300% that we saw. In the current times, as far as this war is contained to the current players that we are seeing, that is just to the Gaza Strip and the Israel war, and it doesn't blow out and bring in more players like direct conflict with Iran and others. I think the prices should stay up to $95. But if this spreads the way things are going yesterday, it's a very volatile situation. Then probably you may see prices crossing $100 and may even go up to $150. And it's a very interesting from an economics perspective. If you see that every time you have a $10 rise in crude oil prices, it brings 0.4% inflation in the economy, global economy. So rising oil prices will have a very negative impact on the already struggling global economy, where we have a fear of recession, slowdown happening. So this should be a negative impact on the global economy. But it all depends on how volatile the situation is and how far does this get escalated from the current levels.
So gold prices are rising amid the war. Given its reputation as a safe haven, do you see gold crossing the $2,000 per ounce mark in the near future?
Yes, so so when we talk from a gold price perspective, gold is basically considered as a safe haven. So any time when there is a crisis, investors would flock to gold for cover. And in the current situation, till now, we were not seeing this kind of a movement in gold prices. In fact, gold prices last month were fairly down by almost 10%. But this year has been very volatile throughout the beginning. And in the March 2023, we have seen that, a record price of $2,000 per ounce was crossed. And currently it was that I saw it was around 1920, 1930 range. It is moving in. And rising gold prices basically indicate that there is a crisis and investors don't want to stay put in the liquidity or any other format and just want to flock to the safe haven. So as we see the current rise in crude price and the tensions escalating, investors will go for cover under gold, and there is this has happened in the past and this year itself where gold has touched $2,000. So there's nothing which would stop probably it from getting repeated this time if the situation worsens from here. And it is also a lead indicator that it's quite volatile environment, and you could see this even in the global market. Like 2 weeks back, you wouldn't see all the markets across the world falling. But in last 2-3 days, the way things are getting escalated, there is a risk of trade, and a lot of investors are selling and moving to safer assets or like bonds and gold. And then we can see gold prices touching 2,000 again this year if this crisis escalates from the current level.
All right. Dr. Suyash Bhatt, thank you so much for joining us on the show with your expertise and insights on this.
Thank you.
WION is now available in your country. Download the app now. Get all the news on the move.